All right. Hello, everybody. All right. So, last time we spoke about um, business entity optimization. We said that we have options. If we are business owners, we have options of what kind of business we have, on what type of entity we should establish for our business, right? Okay. And we kind of went through the different features of each type of business, what kind of taxes does each one pay, and so that hopefully that would give you an idea of what would be the best option for you, and would give you an idea of like how much you're paying and why one structure could be better than the other for your specific situation. But what I often find from a lot of my clients that they don't even know if they have a business or not. Like when we do the questionnaires just to file the taxes at the end of the year or during tax season, like now, I asked question like, "Do you have a business?" And they say no. But then during the conversation, I find out that they get some 1099 jobs, 1099s, and they have a couple of 1099 jobs, and they do some. That means they have a business in the terms of the IRS. Maybe they don't consider it a business, but the IRS consider it a business. Maybe because you file it on your personal tax return, you don't think that you have a business, but again, in the definition of the IRS, you do have a business. So we want to go over this together today and see if it really makes sense. All right, so let me share my screen here. And as always, I like to start with a joke. Because it's a Valentine, you probably know or got some love letters from the IRS, but here is somebody that want to cancel their subscription with the IRS. All right. So the IRS always asks something. Are you, whatever you're doing, is it a business or is it a hobby? This thing 99 you got, is it because you have a business or you just have a hobby? So the big distinction to ask ourselves whether this is a business or a hobby and why does it matter is the filing for it matters. Yes, it does. And we're going to find out how and where each one is going to be filed. But the question to ask ourselves to make a distinction between both is, are you in it to make a profit or not? Are you in this activity you're doing to make a profit or not really? So, yes, you like to do something, you like cooking, you like going on YouTube, you like doing something, doing videos or stuff, and you like anything you're doing as an activity, do you do it just because you like it and it happens to generate some income for you? Or are you in it because it's a real business and because you're actually making a profit? So the IRS lists the sum of factors that we need to look at. And it's not only one factor, it's more than one that we need to look at considerably together. First thing is the taxpayer. Does the taxpayer carry out the activity in a business-like manner and they maintain complete and accurate books and records? Like you keep track of your income, your expenses, you have a bank account for it. All these things we look at. Is this real business or not really? The taxpayer puts time and efforts into the activity to show they intend to make it profitable. So do you have the intention to make it profitable? Do you put the time and effort there, or when you just to get some extra time, you do this or this activity and you don't really care if it's a profitable or not? This is not what the reason you're doing it for. The taxpayer depends on income from the activity for their livelihood, even if it's extra income to your full-time job or something. Do you depend on it to live the lifestyle that you want? Do you depend, like, do you care to get that extra income, or you don't really care if you get it? Do you rely on it or not really? The taxpayer has personal motive for carrying out the activity, such as general enjoyment or relaxation. So if you're just doing it to relax because you enjoy doing it and it's more of a personal, not business motive, then this really goes toward that's a hobby more than just a business. The taxpayer has enough income from other sources to fund the activity. So like you're doing it and you have other enough income from other sources. It's not like you're doing it to generate income. It's not like you're doing it to depend on it for income purposes. No, you're just doing it for fun. And even if it loses money, it's okay. You have other sources and you can fund that activity if it loses because you just like it. You like doing it. So again, this means it's more of a hobby. Losses are due to circumstances beyond taxpayer control or are normal for the startup phase of their type of business. That's why when a client has a Schedule C that keeps losing money a year after another, I warn them it doesn't look like you're in this business to make a profit, to make money. You keep losing money 1 year after another. There's something wrong here. Is it beyond your control? Is it because of things happen in the business activity or in the economics, in the economy generally, or maybe because this is your first year, your second year, so you're just starting up, so it's normal that your expenses exceed your revenue. Or is this something that's more of a long-term pattern that you're losing money? There is a change to methods of operation to improve profitability. So if I'm losing money 1 year after another, did I do anything about it to improve the profitability? Because again, I'm in it to make a profit if it's a real business. So did I change my method of operation? Did I do things differently? Did I try to fix the problem or not really? Taxpayer and their advisor have the knowledge needed to carry out the activity as a successful business. So you have the knowledge, you have the skills, you're doing it because you want to carry out the activity and you want it to be a successful business or not really. The taxpayer was successful in making a profit in similar activities in the past. So you have prior experience, you may have tried it and you made a profit in it before, and now you want to try to make it more of a consistent thing, more of a long-term thing. So this is another factor we look at. Activity makes a profit in some years and how much profit it makes. So does your profit, like does your activity make a profit in some years or not really, or is it losing all the time? And how much is this profit? So it's not enough that it just breaks even or if it's just a small profit. No, the IRS looks at the history and see if it's making profits in more years and if it makes sense. And finally, the taxpayer can expect to make a future profit from the appreciation of assets used in the activity. So you think on the long term, you can make a future profit that your assets appreciate. There is a value for what you offer, that you can sell the business for a profit going forward. So again, all these are factors we look at. Not only one of them, we got couples just to determine whether this is a business or a hobby. Okay, let's say it's a hobby. What does that mean? What it means that it's not subject to self-employment taxes, the one we talked about last time for Medicare and Social Security. It is recorded on your Schedule 1 for additional income and Box 8 other income. This is where it goes. But if it's a business, then it goes on your Schedule C. This is the profit or loss from the business. We put the gross receipts that you incurred from your 1099, or even if it's cash, we include it here, and you put your expenses, and it's a real business. So both of those goes on your 1040 on your individual tax return. However, it's different treatment. This one, Schedule C, is subject to self-employment taxes. Your net income is subject to self-employment taxes. All right. Schedule E, what does go on Schedule E here? So you probably don't have it as a sole prop. You may have it as a partnership, or you may have it as an S corporation. S corporation, of course, is more familiar to those who own 100%. Like you can be 100% and you have an S corporation. But if you have more than one partner, then even if it's your spouse, then you can have a partnership. So if it's income or loss from your partnership or S corporation, guess what? It goes here also on your 1040. So even though you file a separate business tax return for your partnership or your S corporation, the income or the net income on the partnership or S corporation, it passes through to you. We call it pass-through income because the S corporation and the partnership, they do not pay taxes on their own. The taxes gets paid on the individual level. So that answers the question to a lot of people, a lot of my clients when I ask, like, how much am I paying? Or how much do I need to pay this year? I'm like, I have to look at the business. I'm like, yeah, but I'm talking about me personally. Yes, but the business is flowing through to you individually. So even if you have a W-2 from a full-time job and you have another business of your own on the side, we have to look at this business. Does this business make a profit or make a loss? And then this goes and get reported on your Schedule E on your Form 1040, the second part of Schedule E on Form 1040. 1040 is your individual tax return. So even though it's, again, we file a business tax return for it, it goes and it flows through to you. So in the IRS standpoint, you and your business are one from a tax standpoint. Yes, there's still different legal entities, there are different tax returns, but you are paying taxes on behalf of your business. It gets reported on your personal tax return. So that's why it is recorded here, and that's why there is a distinction. Maybe we'll talk about what's passive versus non-passive in a different video, but usually you would see the name of the businesses here. If you have 10 of them would be included here. Of course, it can be like listed as a statement. And the type, whether it's a partnership or S corporation, and you get the EIN number is recorded here, and whether it's a passive or non-passive, the income and losses gets reported in this part, and all adds up to your individual tax return. All right. So it's important for me, it was important for me to explain this today because I'm preparing for next week topic, which is gonna help you understand what does it mean, what if it's on the business, why is it helping me on the individual side. It's a very, very good tax strategy that a lot of people do not know about. And it was important for me just to explain to you this today so you know what I'm talking about next week. All right. Again, just continue the conversation. If you need any help with anything, please let me know. If there is anything that needs clarification, if there are topics that you want me to talk about, I would appreciate you let me know. All right. Thank you guys so much. Take care.